Welcome to the BlockCrunch podcast, the go-to podcast for investors and builders in crypto. And before we get started, just a reminder for you guys out there, the BlockCrunch podcast is intended for informational purposes only. Neither the host nor its guests are licensed financial advisors, and nothing discussed should be construed as financial advice. Views held by BlockCrunch's guests are their own, and sponsorship messages do not constitute financial advice or endorsement. With that out of the way, let's jump right in. Now, before we get started with today's episode, I've got some great news for you. Now, a lot of you have been asking for how I analyze projects that I bring on the show. That's why I decided to create BlockCrunch VIP to share with you all the heavy research that goes on behind the scenes. Now, every week or so, our team prepares an in-depth research memo with things like sector analysis, technical concepts made simple, in-depth competitor breakdown, and even interactive models, so you can learn about the most important projects before they become important. And our team is putting in hours every week scouring Discord, Twitter, forums, and blogs to help you get an edge in crypto and understand the latest projects and themes at the deepest levels that goes way beyond just an interview. Now, in addition, we'll also host exclusive AMAs with myself to answer any of your questions. So all of these are only available to BlockCrunch VIP subscribers. And the good news is that while our interviews will always be free, the VIP tier costs less than one coffee a day. So head on over to theblockcrunch.com/VIP or click the link in the show notes below to sign up. All right, hey everybody, welcome back to another episode of the podcast. Now this is a very special episode because this is a co-production between BlockCrunch and Hodlong, which is a podcast you should definitely check out if you haven't already. And today with me I have my two good friends, Darryl and also Mable. So all of us are part of the angel fund called Tangent. And we are all at a very interesting point in our career right now where we all kind of recently stepped down from pretty prominent funds in crypto to pursue our respective ventures. And we're going to talk about that in a bit. So this is very much a free-flowing conversation with two of the smartest people I know in this space. So I'm really, really excited for this. But I'll pass it on to Mabel first in case you want to kind of say anything to your audience as well.
Thank you, Jason. Thank you. Yeah, this is my first time doing co-branded production as well. I'll just say a very brief intro. Thank you for coming back to the latest episode of Hot This is Mable Jiang, your host. And then we have co-host Jason Choi here to join us. Shall we run a very quick round of intro for ourselves, or how should we do this?
Yeah, let's do it. Why don't you guys go first? Darryl, you want to go first?
Yeah, so my name is Darryl. I'm currently a co-founder of Tangent along with Jason. So everybody here is sort of like family. Previously, before this, I was a principal at DeFiance Capital, which is one of the largest Asian-based crypto funds alongside Spartan. So, and really helped build out the team there for the better part of 18 months. And left to start Tangent with Jason in sort of March or April of 2022.
Cool, I'll go next. Hi, everyone. I'm Mable Jiang. I'm currently the Chief Revenue Officer at StepN, and also I'm a mentor at Tangent, which is what Darryl and Jason right now is full-time working on. Before StepN, I was a GP at Multicoin Capital. Very excited to have some, chit-chat today with two of my friends here.
Yeah, and for listeners of the show, you know me already. My name is Jason. I used to be a general partner at a fund called Spartan Capital and recently stepped down to start Tangent with Darryl. And we're really, really excited to bring on board Mable as one of our 6 very experienced mentors as well. So why don't we jump right into it? Now, I think a lot of people are probably thinking, okay, why did we give up these amazing careers at amazing funds to go about our separate ways? What was the rationale there? Feel free to jump into it.
Yeah.
Go ahead. Darryl, you go first, because you were the first one left.
Yeah, so I guess this is sort of my fault to an extent. Back in sort of end of 2021, realized that I wanted to do a bit more than just the existing crypto investing in a conventional fund. I think after working in the space for 18 months, we realized that there were a couple of pain points that VCs or crypto VCs didn't necessarily address. I think the largest one was providing adequate portfolio support to the investments that they've made over the course of their life. And so when we were brainstorming this with Jason, we tried to find a way to structure a investing entity which could, really address this point. And so, in order to do that, you needed to sacrifice the number of bets you made. So you had to concentrate basically the portfolio to an extent where you could really sit down with each and every portfolio company and really help them through, the key problems that they're trying to solve at the early stage of their lifespans. Maybe
Yeah,
you
that
go
makes sense.
next.
Hmm. Yeah, no, I think that was quite different from the reason I left Multicoin for me. For me, I mean, like Multicoin was very interesting working there. Everyone was very smart, and then I constantly, I would say, even up till today, I feel like I can still learn a lot from all my colleagues there. One of the major reason that I left was more because I wanted to work on StepN. For Multicoin, for those who do not know, we actually are very focused on investing in protocol level stuff. And then we actually did not do much related to like consumer or like anything that's B2C. And I personally actually believe the next wave of big explosion would actually happen with regards to anything that's B2C. And then I actually think this is like a little long haul, but I would say a lot of the opportunity would actually happen in Asia. If you look back to the Web 2 kind of wave, a lot of the new innovation at the beginning always happened from North America, especially US. But then later on, with a lot of the application layer stuff, the Asian founders are actually very good. And then they are very good at kind of think about the operational models and whatnot. So yeah, no, at that time was really just like a very interesting period when I, constantly question myself, what is the next or what is the killer app that we've been looking for in our 5 year, 4 year career life of crypto? And I never found that. And I realized that maybe it's not like something fully crypto native or fully on chain. It doesn't have to be. Like things that we constantly consider as Web 2.5 may actually be pretty cool to also, get the actual next 10 million or 20 million users into the crypto space. And then I think like Steppen is perfectly like that. And also obviously I started to develop a thesis of a super app back in 2020. But then I was more thinking about like completely all on chain, and then like DeFi super app, one project work on everything. But I realized obviously like all the composability factor in the DeFi determined that actually it may not be the case. However, I think the real super app, my thesis now has been modified towards that if you have a UI or a front end that can attract a lot of people, then you can actually aggregate all kinds of other protocols regardless like who is providing that protocol layer. It could be many different teams working on the back end, the protocol layer, but then the front end could still be the super app. So I thought Steppen was a great opportunity for me to kind of find out whether that thesis works out or not. So yeah, it was a long answer, but I would say it's really because of the opportunity rather than I don't want to work on the investment stuff. I still were very excited about all the things happening in the space.
Yeah, no, I think that's super interesting because Mabel, I think you of the three of us have been in this space for the longest. And I think in the past few years, the space has kind of fascinated between Asia is the future of crypto, and then back to the U.S., and then now the U.S. is like banning Tornado Cash and all that, and then now people are like, oh, back to Asia. But then you've always been pretty consistent and steadfast about your Asia thesis, and obviously it played out with Steppen as well. So I'm really excited to see that, and we're definitely going to dive into that in a bit. But just to give some context around myself as well, I stepped down from Spartan earlier this year as well. We have a great team. I have a really great relationship with my other GP, who's Kelvin, who's been on the show as well. He's been a great mentor of mine. I've learned a ton from him, and I think I continue to learn from him. But similar to Daryl, I kind of wanted to work closer with founders, and it was increasingly hard to do at larger funds. This is an issue that any big fund will face, right? Any venture fund will face. And the only way I could really get that intimate relationships with founders and really get in kind of the trenches, as Daryl mentioned, is to be a very concentrated venture portfolio. And it's very hard to structure an institutional fund around that. But we thought, okay, maybe a DAO type of structure makes more sense. But then Daryl and I are both a little bit bearish on DAOs, on investment DAOs. So we decided, hey, why don't we take the best parts of a DAO? So we have the flexibility of including the best people we want without the rigidity of a fund, and then also take the best parts of a fund, which is the rigor of the due diligence, having an actual process, having people at the helm to actually drive things full. So we combined the two, and then the Tangent idea was born. So now we have, very excited to have 8 of us as angel investors investing in companies together. Um, so I guess on that note, with regards to kind of companies we're looking for, what are you guys mostly excited about? Maybe I know you're excited about consumer, but are there kind of specific areas in consumer that you're mostly looking towards besides StepN?
Yeah, I'll answer this question in a little bit of different angle. I would say the way I pitch to other people today about StepN is really it's a consumer social entertainment conglomerate that is partially powered by blockchain. That's really how I kind of pitch other people, like what we are, because a lot of the things that we are producing are not related to crypto. But I think what's very important is that we should leverage blockchain to the extent that it actually provides like higher efficiency in a sense that say all the account wallet or whatever, and also like transactions happening on chain, right? These are the things that are improving the efficiency, not decreasing. Not all the decentralization is providing better efficiency, right? So I think what we have done in the first step of building StepN is really to kind of like provide people a way to learn about how you adopt a non-custodial wallet, which in the future I actually prefer not to call a wallet. I would actually prefer call it a Web3 login or account, because like this is like basically the thing that you would use to navigate around different protocols layer or applications in the future, and you can use the same one, whichever one that you're interacting with. So I think from my perspective, StepN is really just leveraging the best of blockchain, which is the account system, and also you can send transactions to different people without there's no kind of gap between Tencent and Alipay. You can actually just navigate through the blockchain ledger, right? So that's like the absolute very kind of primary reason that a lot of us are attracted by how quote unquote efficient blockchain is versus like some of the other like decentralization may not be serving the best purpose for the mass adoption. So I think that's one. I think the other thing is that I remember yesterday I saw someone was doing a poll on Twitter, and then Jason Cam, Maple Leaf, like he was responding to other people. Like the guy was basically asking, what is the most thing that you think? What is the one idea that you don't think there's any consensus around, but you firmly believe? And then he said he believes that DeFi protocols do not need to be existing standalone. Like they can basically just getting integrated within like a larger, basically like the kind of idea that I just pitched you. Like you can basically produce a conglomerate, and then you can serve all the other DeFi. I'm not sure whether that is the right way to explain for all of the other app, because I still think if you're working on a order book, for example, like you would probably still offer it as a exchange product standalone. But let's say you're working on a simple lending, or if you're working on a AMM, maybe yes, like the one that any company that actually owns a lot of traction might actually just work on it themselves because it's very easy to fork. So I think that's another thing that I was very excited to see whether that plays out, which is someone who were able to kind of bootstrap the traction and then later on use that traction to kind of offer the kind of DeFi product to people who would actually never have interaction with DeFi, but then like offering that service through like a very day-to-day kind of experience. I think move to earn, like people are kind of cashing out from the game and then trying to swap it into like Solana or Ethereum. That was a perfect example. Otherwise, like no one's gonna use it. Like a lot of these users are not gonna use the DEX anyway, right? So I would say that is another kind of direction I was kind of looking at as well.
So you're
I'll
talking about
pass it on to
how
you guys.
StepN plugs into, I think, was it Darryl? Was it Orca that
Yes.
It
StepN
was
plugs into in
Orca.
the back
So
end?
now
Uh,
so now we own our own deck. It's called Door, DOOAR. Um, yeah, uh, that's the kind of thesis I was betting on. I'm sure there will be more than just ourselves. Obviously, like you can,
hmm.
like not everyone would buy this thesis because like people would say you can just integrate someone else and then like integrate it SDK. But like for example, if someone owns a traction, I would say in the early days they might want to build it themselves. But it won't happen continuously because there's liquidity fragmentation as well, right? Like you always want to make sure that you're using a DEX to your offering a DEX to your users where the DEX has very deep liquidity. So I think maybe the first one or two or three kind of super app they would work on their own DEX, but I don't think it's gonna happening again and again because yeah.
I think
Mm.
you're beginning to see examples of this. I think in a slight variation in terms of app chains, basically, right? With
Mm.
app chains that are coming on board, I think that is the idea that some of them are trying to pitch, but maybe not so forthcoming with saying, okay, if I'm a DEX, I want to introduce a lending protocol, I want to introduce a derivative trading, for example. But I think that's the sort of direction that most of these larger apps are beginning to take. If you notice, I think for myself, like instead of answering what I'm bullish on, I think I'll try and reframe it and say what I think needs to happen in order for crypto adoption to appear. And recently, in the last 3 months, with Luna's implosion, I think now more than ever we need the importance of a decentralized alternative, money is extremely important. Like a decentralized stablecoin, I think is very very important. If you were to imagine a world where crypto adoption has 10 or 100x, and you have a billion users using Web3, will you still be comfortable with two or three large centralized providers owning the majority of stablecoins in circulation in the market? I think that's absolutely crazy. So right now, I think and this USDC and USDT are great sort of bootstrapping mechanisms in my opinion of like pushing out stablecoins and encouraging adoption of stablecoins as a method of payment. But I think if we don't have a decentralized alternative, there will always be a single attack vector that could end up in catastrophic consequences if any of them were to ever go down. And we've seen all the FUD before, but I think it's quite relevant, right? If, for example, can you imagine USDC holding $1 trillion of market supply? I think like what kind of centralized risk does that pose to our very industry, right? I think that's absolutely nuts. So I do think that we need something like that to happen, and I think the market is sort of ready for it, right? I mean, with Luna's downfall, there is a pretty big gap in the market there, and we have some alternatives right now, right? We have Dai, we have Frax, but I want to see a stable coin that really has a valid use case that really makes people want to use it. And I would say so far, um, we haven't really seen that happen yet. So I think that's one thing that I think we definitely need as an industry in order to accelerate adoption. And the second one that really drew me into crypto was the concept of decentralized ownership of assets. So I think this is really comes into play and got me really excited in the form of play to earn and GameFi, where you could basically decentralize, you could create, virtual economies and then begin to distribute, virtual assets, which previously were just pretty much useless, but now with the concept of like allowing trading, allowing play to earn, I think productive virtual assets are very very interesting to me, and I would like to see this vertical be built out, in a way that it can rival the physical of real counterparts. On to you,
Yeah,
Jason.
I think the stablecoin part is really interesting, right? Because on one hand, you could argue that Terra imploded because there was no regulation. There was no one, monitoring the risks and making sure that this model works. And then with USDC, it's technically regulated. But I also understand the other side of the argument, which is, if USDC penetrates the entire crypto market and its $1 trillion market cap, and regulations suddenly come down and say, hey, we're going to ban like this region, then we basically cripple an entire sector of DeFi in one go. So we need some sort of anti-fragile, decentralized stablecoin, which I absolutely agree with. Yeah,
I
maybe
was
you were going
gonna
to say something.
say I might have a very different view on this because Tether
Mm,
has a lot of holders in Asia,
mm,
particularly in China. So we all
Yep.
know there's a lot of intransparency around Tether. But then it's still, I think before this cycle, like it was actually the most widely used among all the stable coins. But none of us know like what is actually behind, and actually no one cares. What is
Yeah.
really supporting it was the social consensus. I would say for USDC, like at some point when it gets adopted by a lot of people, the reason that is supporting its existence is not because the reserve back or whatever. It is part of it, sure. But I think it's also because like everyone recognizes it as a quote unquote stable coin. I think the same kind of rationale behind how I thought Tether was going to last for like longer. And then there's like a Lindy effect, right? So well, I mean, obviously, like Tether has something behind it. You can't have like nothing behind it. But as long as you have something, and then people are using it, like all the DeFi protocols are having the USDC integrated input, whatever. That actually adds to its robustness. So I actually have a little bit different view on this one.
We should bring Sam from Frax on for a future episode
Yeah,
because
I was gonna
he's
say
the
that. Yeah.
yeah.
So for the listeners, Sam is the founder of Frax, is $1 billion algorithmic stablecoin, and he's one of the mentors at Tangent. And he's one of the first people to really talk about this idea of partial collateralization. And I think they have a really genius model for the algo stablecoin, which we can save for another episode. But before I kind of go into what I'm interested in, I want to go back to your point as well, Mabel, about the aggregator thesis, because I remember I thought the same as well back in DeFi summer, and then I saw a project starting to verticalize, right? And every project was starting to build out their own like DEX arm, a lending arm, even like 1inch as the aggregator. They built up their own AMM, Mooney swap, but no one really used it. And I haven't really seen a successful example of vertical integration yet. And to me, it kind of contradicts the thesis that composability is one of the best things about crypto, right? You can just like plug into other apps, but it seems like the incentive for founder is to verticalize and build out their own applications, layers of the stack, instead of leaking value to someone else. So I'm curious, how you reconcile those. Do you think this is how things are going to go? Are all founders just going to end up building their own neo banks and just siloed from each other, basically like almost recreating Web 2? Is that like a concern that you have?
Yeah. I think that's exactly what I was saying. Like early on, I thought DeFi super app means one team building out everything. But I said I
Mm,
don't think it's the case. I think here
mm,
for Steppen, the way I think it would work is that we identify a need where a user actually needs to use the DeFi for the AMM case, for the Orca case, was that they actually need to use Orca to cash out GST, or maybe like buy some other things like there to kind of in order to play, right? So that's really it starts from the demand. So like, at some point, if people are saying like I'm having too many souls in this wallet and I don't want to transfer it out, maybe it's also okay to integrate Solend first. And we don't have to build everything ourselves. I'm just saying that whoever owns the traction could leverage the traction to do a lot of things, including providing these protocols themselves. But I don't think it works the other way around, which is like you kind of start a DeFi app and then like you try to build out everything, because like maybe you're not really serving the actual need. But then like, if you're seeing your users from our case, because like you're seeing the users have a certain need to kind of like use that, and then you build it up. Like, I think that's a different kind of logic, if that makes sense. Yeah.
Yeah, and I don't know if you guys agree with that, but that's kind of the thesis that we had when I was still back at Spartan. We invested in Consensus because I
Okay.
thought that MetaMask is probably the most valuable product in all of crypto today, because every single person except Solana who uses crypto uses MetaMask, so they can literally build out their own lending. They have built out their own swaps, and I think it's like pretty profitable as well.
Yes.
So that was like one of the only growth stage deals we've ever done at Spartan, and because we think MetaMask is just insanely valuable because of that. Um, and I guess that kind of yeah, go ahead.
No, I was gonna say I agree with you, but then also like I want to get back to the kind of Web3 login and account point a little bit more, because I realized I didn't really expand on that. So I think first of all, people kind of already start to forget about smart contract wallets, but I actually think this is actually extremely important for mass adoption. Like it has been always failing, among a lot of people who tried it before. because like the gas during DeFi summer is crazy. No one's gonna use that. But actually, if you want to help user like in a non-custodial way to access blockchain wallet in a very simple way, the smart contract wallet's almost like the only option. And then now we have all these availability of all the L2s and whatnot. So I thought maybe the next cycle smart contract wallet would be a really interesting kind of play. I don't know who's actually going to play out. Even just things like Taurus. No, I mean, sorry, Web3 auth, like this. The private key management solution. All of these, I think these are going to play out for sure. Like this is one thing that's really kind of related to Web3 login. I think the other thing about the account system, like the identity, is on-chain credential. I think we talked about this many times before. You and I, we both kind of invested in Galaxy at some point, and then I think not just Project Galaxy, but there were a lot of other kind of players were trying to work on something around that. But I do think if you want the user to be able to navigate around like the whole ecosystem with some sort of badges, either on chain and off chain, I do think having those infrastructure built out will also be very important. I just want to add these 2 points.
Hey guys, I'm really excited to tell you more about one of my favorite products in crypto right now, DYDX. This is a team I've known since 2018, and they've built one of the best exchange venues out there that also happens to be decentralized and mobile friendly. Now listen until the end because there's an opportunity for savvy traders out there as well. And here are just a few reasons why I like DYDX over other exchanges. First, it's very liquid. It processes $2 to $3 billion every day in volume and has 35 perpetual swaps as of this recording, which means you can trade things like Ethereum, Bitcoin, Doge, Solana, and most of the most popular assets with up to 20x leverage in the venue today. Now second, it's also extremely cheap. And if you're down bad from the bear market, you don't have to worry about gas fees at all because there is no gas fee on Starkware Layer 2 where DYDX is built on. Now that brings me to my next point as well. It's incredibly fast. Unlike other layer 2 and high-speed dexes, you don't actually have to wait to withdraw your assets anymore. And as an additional point, by using Starkware, DYDX also provides user with increased security and privacy. And my personal favorite feature is the cross-margin feature, which means I can seed one account with USDC and trade across multiple markets from there without needing to start sub-accounts because I really hate managing so many different sub-accounts. And their iOS mobile app is also live right now, and it's amazing because it's compatible with MetaMask, Coinbase Wallet, Coin98, Huobi Wallet, and a lot of the most popular mobile wallets out there. And it's available for people outside of the US or sanctioned countries today. And one last thing, one exciting opportunity is their competitions. The most recent tier in the $10,000 equity tier have won over $95,000 in rewards. And you can get started with as low as $500 in equity to compete for prizes. So if you're already trading, might as well get paid to do it. So if any of that sounds interesting to you, I highly recommend that you head on over to dydx.exchange to learn more. And I thank them for sponsoring this episode.
Yeah, I think that makes a lot of sense. And Darryl, I don't know if you remember, but we actually looked at quite a few wallets like a few months ago, and I think one of them was pitching this quite interesting thesis that users only care about convenience, so decentralization doesn't matter. So they were actually creating a custodial wallet for games. So I expect to see more interesting wallets with like vastly different trade-offs come to market. But
Mm-hmm.
I'm also curious like why we haven't seen more adoption of like smart contract wallets. I don't know if you guys used like Argent before, but I thought it was like an amazing mobile app. And you can like access DeFi applications within the app itself, and there's like a guardian system as well. So if I lose my seed, I can actually recover it. So I thought it was a great product, but I just don't know why people haven't started using uh, smart contract wallets more.
I thought
I
about
think
that.
it's because
Go ahead. You go first.
yeah, no, I was just saying I think it's because user behavior for Web3 related activities is still very heavily focused on the desktop as opposed to on the phone. Like I don't know anybody who like uses the does things on chain via the phone, right? Just because you don't have a cold wallet to back things up. So, but perhaps the circle I work with is the more crypto native sort of guys, and but at the moment, I think you need to crack getting users onto mobile in a seamless, in a safe and secure way before we really see more of that happen. But I would like to say as well, I think with the amount of new protocols that are starting up. They're focusing on security, focusing on onboarding Web 2 participants to Web 3. I think in the next cycle, we will really see uh, a number of solutions that will really help take off, increase adoption.
Yeah, Solana phone, baby. We're all gonna order one.
Yeah, no, I was gonna say like in this cycle we just didn't have enough number of the mixed like Web 2.5 kind of app. Like for though a lot of those, like
Mm,
you would actually need the smart contract wallet to onboard people because like that's the easiest way for them to interact with the application, right? Like even for us, like
mm.
because the performance for blockchain is really hard, so like you have to have both this the non-custodial side as well as the custodial side, which is the spending account where people would just perform things in a centralized way. And I see
Mm.
there are going to be more and more applications like we'll be operating in this mixed kind of manner.
That yeah, that's a really good point because I almost forgot STEPN is completely mobile, and I think it's the
Yeah.
most used mobile app in crypto, right?
I don't, I'm not sure. I don't like, it's really tricky for me to answer this because I don't know other people, but it is quite
Mm.
widely used. Yeah.
Yeah, I guess like besides exchange apps, right? Like not counting like Binance app or FTX apps,
I
it's got
see.
to be up there. It's got to be like top five.
Yeah,
And yeah, for
I
people
can
who
say
want to
that.
know more,
The
yeah, for people
user,
that want to know more, we did.
go ahead.
Yeah, sorry, go ahead. No, so
I'm,
I just want to say we wrote like a memo about STEPN and how it works. So in case you guys are wondering what Mabel meant by the spending account and all that, we did explain it in that memo. So I'll link it in the show notes below. But
okay.
yeah, it's a great point about kind of mobile use case as well. And I want to make sure that I'm not kind of copping out of my answer as well. So in terms of like what I'm bullish on, I think a lot of what I'm interested in is I think I share a lot of the commonalities with you guys. I'm looking for identity solutions. I'm looking for interesting games that could bring on board a lot more users than just crypto natives. But I think one thing we didn't touch on so far was NFT finance. Um, so far, we actually see quite promising metrics, right? So on things like NFT-Fi, which is a lending protocol, they recently had the record month in the bear market. And then, Darryl and I are both big fans of the guys at Sudo, which is this AMM built specifically for NFTs, which we think is a superior design compared to existing ones like NFTX. And then there's some interesting stuff happening. I think one called like Putty Finance, which allows you to like buy put options on your NFTs, basically as an insurance for NFTs. And then we talked to so many teams that are building like neo banks for NFTs, right? So basically, you earn yield through your NFTs. And as Tangent, we actually in our previous batch we invested in this DAO called Goblin Sacks, which experiments a lot with like NFT finance ideas. So the first product is basically writing loans and underwriting loans on NFT Fi, and they're earning a ton of interest just from doing that, and then they're expanding to other verticals. It's still extremely early, but it just combines my interest in DeFi with my curiosity around NFTs. Um, so we're actively looking at stuff in that vertical, and every other week I think we get a pitch in that vertical.
Yeah, but that vertical is pretty hot right now.
Yeah, yeah. And I think we should jump into kind of talking a little bit about Tangent as well. So I think Daryl, you're probably the best person to answer this, but why did you start Tangent in the first place? Like why what made you come up with the idea?
Yeah, so I think it came up because I felt that right at the moment, despite all the innovation happening on the DeFi front, on the GameFi front, in crypto, on the investing front, the process and structure was still quite archaic, right? A lot of the conventional, all the structures basically in Web3 investing, which is basically borrowed and copy and pasted from traditional finance, right? You had conventional VC investing with 220 structures, hedge funds. I think the biggest variation we got was like open-ended hedge funds that had the ability to double dip in the primary market as well as the secondary market. I think that was like the biggest difference versus conventional traditional finance firms. But I realized that with crypto, and the most important distinction here with tokens is the time to liquidity, which I think drastically changed the risk reward metrics for primary market investors. And that was also, I think people caught on to that in 2021, where a myriad of different crypto seed funds started launching because everybody wanted in on the very lucrative seed, crypto seed deals. But what it with this in mind, I thought instead of just trying to be extremely PvP and extremely exploitative about it, we could use this and sacrifice and trade off other concepts or other elements in investing to provide the best value proposition for our counterparties. So I think in terms of thinking about Tangent, I wanted to think of it as a service or a product as opposed to as a fund, right? So to me, um, I was having the philosophy of being an entrepreneur, selling my service to founders and seeing whether they were interested in what I was offering, as opposed to saying, I'm a fund, here's my money, do you want it or not? Right. So I think that was the main distinction when I was trying to conceptualize Tangent. So right now, so in using the trade-off of earlier time to liquidity, what we could do is we could scale down the number of bets that we had to make. Because in a conventional Web2 fund, for example, uh, as a seed fund, you wouldn't be able to write, 10 to 20 checks as a fund and expect to survive. I think diversification, the law of large numbers just basically indicates that you would need to have, 50 to 100 bets in order to be able to hit, one or two of those home runs, because the 90% of your bets are just simply going to fail and you're just not going to see any ROI on it. But for Tangent, because of the earlier time to liquidity, we could afford to scale down that number. And which is why eventually what the number we came up with was 15 to 20 bets every year. That's what it works out to, which is 80 to 90% smaller than what your conventional funds are doing, right? So and so the trade-off there, so we're using the earlier time to liquidity, and what we're giving back to the founders is basically a superior portfolio support level, right, or service level, right? So that is the service that we're offering, because now with the smaller number of portfolio companies, we can really sit down with each and every one of them, create a bespoke structure to advise them on what they really need help with at and with every portfolio it's different, but we have the time and we have the resources to do so. So I think that was really what I felt most strongly about when starting Tangent, and curious to see whether that was sort of the philosophy for you as well, Jason.
Yeah, I think very similar philosophies. And I think just to clarify as well, I think with the earlier time to liquidity, we are also we kind of brand ourselves as a permanent capital because we don't actually have to sell. But it's just the fact that there is liquidity and we are able to at least see some on paper returns on our fund to know that where we stand as a fund. That makes it easier for us to make this kind of concentrated model. And I think that the good thing as well is because we don't have a fund life, we're not forced to sell in like 5 years when the fund ends. We can hold on to it forever if we want to. So I really like the flexibility. But the most important part for me is finding a tribe. I always notice that a lot of friends in crypto tend to just congregate in tribes. Like there's a bunch of people from Singapore very close to each other. There are a bunch of people in Silicon Valley very close to each other. And as someone based in Hong Kong, a lot of people were leaving the Hong Kong ecosystem. So I actually really wanted my own tribe, and I didn't want to do a DAO thing because, as I mentioned, like we're pretty not confident on DAOs executing, like, especially at least in an investment context. So we basically created this group of people, who are friends or people we've worked with or people we trust and respect a lot, and we invest together. That was a simple idea, and I'm really curious, which part of that resonated with you, Mabel, when you decided to kind of join a board, because Multicoin, I think, is known as one of the investors who's like truly hands-on, right? Especially, I think Spartan and and Solana had a lot of dealings before, and from those dealings, we got, I guess, pretty familiar with how Kyle worked at Multicoin, and we know that you guys were extremely hands-on, and it seems like that's something that's really important to you, to Mabel.
For sure. I think people at Multicoin, I think we obviously it's not like what Darryl was mentioning, just giving out checks and then leave it there, because we are not like a beta focused fund. By beta focused fund, I meant you just raise a very large AUM, and then you kind of expect that whatever thing that you invest average, like just get 3 to 5 or maybe smaller, like 2 to 4 kind of times of return, and then you'll be fine because you have a very large AUM that then you can afford to just have a very low, like not sorry, not very low, a relatively lower kind of return compared to some of the other smaller venture funds.
Mm.
For us, I think we want to work on. We're very clear. We only want to work on things that we care about. Like I think one of the key thing we ask in IC during like those period when I still participated in the Multicoin IC was that are you truly excited to work with these people? That was a big factor within
Mm.
all the investment. And I think that matters a lot because if you're not excited to work with these people, and then like you probably should not be leading. And then later on, even if we were at just 100 million size where everyone else was actually 200 or whatever, like the venture fund 2 was 100 and then the venture fund 3 was
Mm.
430, I think. Both are not very large compared to our peers at the same AUM, but we intentionally chose that because we wanted to make sure that we can lead every single deal, most of the deal that we like, and then try to be sure that we are very hands-on, and then we are very concentrated with whatever time that we are spending with each of the portfolio. But I think to answer your question about why am I interested in Tangent, I think there's a few other observations also I think come into my mind. One thing is that I would say not just Paradigm or Multicoin. I think there's a trend. Basically, all these funds in this space have to like strive for deals. Like you can't like the age of like you just sit there and then give out checks has already passed. It's very hard to do that
Mm.
anymore. Even if like after interest rate has hiked and then there's not as much liquidity today, but still you'll have to kind of prove to the founder, if you're especially to the good founders, that you're worthwhile for the allocation. So I think this just like becoming more of a trend, and then so like everyone are almost like forced to really pick their rabbit hole and then be very good at certain things. For example, Multicoin is known for like, good at investing in protocol level stuff, infrastructure level stuff. And then we can tell people that, oh, like, we have this other portfolio that can also have like huge synergy with you. So then that's like the rabbit hole that, Multicoin is really good at, right? Versus maybe some other investor like Jason Cam, like he's very good at application layer stuff. And then he has a lot of insight
Mm.
from his past investment experience as well. So like those are also like the specialty. Like everyone would have to find some of their own rabbit hole or like the kind of the quote unquote brand name so that they can get a lot of other good exposure. Like it's really really hard to become a very very generalized fund these days. That's one kind of observation. The other thing is that I realized over the past 24 months or so, a lot of the deals are basically done in a way that one of the mega fund lead or one of the large whale lead, and then the rest of it is just angels. Like, and then most of the angels are all founders. The reason that these deals were raising from the founders is because like these founders can actually provide some sort of synergy to their own startup versus like maybe giving the allocations to a smaller fund may not even be the case. So I feel like that's another kind of observation that I've seen, and I think Tangent exactly kind of shows this, which is like all of us have different sort of expertise or resources. A lot of us are actually founders, right? Like Mackie or the guy State, right? And then also like Sam and also myself as well as
Rationale.
Tasha, exactly. So all of us worked on different projects that have different experiences and resources, can bring different kind of skill sets to the table. And I think that's really the kind of way you can really help out the project to grow. So I thought it was a very interesting model for everyone because it's not forced that you have to participate in a certain thing. You only invest when you feel like you can truly help. So I really like the model.
Yeah, and we really kind of thought about this from the ground up. And I think I forgot who said this, but someone was joking to me that this is like the Avengers model, where we find like the best superhero from like their respective franchises,
That's
and then we kind
funny.
of just come together for
I've never heard that.
because
That's good. That's a good one.
yeah, so I think it's yeah, I'm really excited about the model. And it's interesting to hear you talk about the investment process in Multicoin as well, because I don't know if you noticed, but we actually borrowed some lessons from how you guys do it. I really like the fact that I think you mentioned before that you guys are very writing driven. So someone writes out the memo and then everyone comments in. So that's kind of what we carried over to Tangent. We basically just share a memo after Darryl and I have done the work, right? The DD, the reference check, and all that, and then we write the memo and share it with all the mentors, and then everyone chimes in with their questions and try to poke holes, and that's something that I really like. And I'm really interested in Darryl when you were at Defiance as well. What was the investment process like, and were there elements that you brought over when we were looking at like the 300 or so deals that we've looked at so far?
Yeah, no, I think I really got my trial by fire at Defiance because prior to Defiance, I had almost no VC investing experience. And one of the very good things about my previous boss Arthur was that he really let us take the reins when we were there, so that we had you know the highest opportunity, the most opportunity to learn as fast as possible. And so over basically there, I think one what I think Arthur was very good at identifying certain narratives and being disciplined about allocating capital. So I think even as the portfolio expanded in Defiance, Arthur was always very conscious of not spraying and praying. And I think valuation was one thing that he always was very hesitant to sacrifice.
Mm.
So we would always be looking at valuation as providing that reasonable margin of safety for the deals that we did. Which is why, I think, to now I still respect and really admire him as an investor. So I think that was the biggest takeaway for me in terms of process. I learned to develop a lot of things on my own. Actually, outside of Defiance previously, when I was working for a university fund, back when I was still studying. But I think I learned a lot actually from you, Jason, from the way that you operated. Given that you learned, you were in the space a lot earlier than me, and you had a lot more deeper VC experience. So up to today, I'm still learning, right? So it's a pretty unique experience, I feel.
Yeah, and I
I,
think yeah.
I was gonna just ask you guys, other than the writing process, was there, 'cause like you told me like you have what, 300 in total for like, applicants, right? So then were there something, I'm sure like you could screening them in a relatively fast manner, but like, at the same time maybe be looking out for some important stuff. Out of a team, what would be some of the things that you look out for? I was just curious about that in the screening process.
Yeah, I can take a step first. So, just go to the very beginning of the process in terms of filtering. So, we do have a cold application form that people refer to us, that people use to apply, but we strongly prefer people who come with referrals. So, I think between Dara and myself, we probably have connections with like hundreds of founders, and then if you add Mabel as well, we have like hundreds and hundreds of connections in the space. So, whenever someone we know or we've worked with or respect, or investors that we've co-invested with refer a deal to us, that's usually a very, very high signal. So we put it to the top of the list. So that's how we kind of filter out the best kind of companies first. And then the second, so Darrow and I came up with this way to codify our heuristics. So I realize it's very, very easy to fall to biases when we invest. So when we look at founders, if it's someone that's like young and talks fast, usually from the West Coast, we're like, okay, this guy knows what he's doing. And then we realize, okay, they have no clue what they're doing. So in order to remove that kind of subjectivity, we actually have a scoring system with different weights that we've back tested with a lot of the deals that we've done at both Defiance and Spartan, so across two portfolios. And we weight founders across several metrics. So like founder market fit, whether this founder is actually fit for this market, the size of the market, so the TAM, the serviceable market today. So for instance, just because DeFi's total addressable market is finance is massive, doesn't mean the DeFi market is massive. So we take that into consideration as well. Obviously, valuation, vesting. So we rate all of those projects on the same metrics, and I think we've done probably like 100 now just to back test it. So that's our sanity check to make sure we don't succumb to subjectivity. And then finally, we're really looking for founders that we can work with. So, a lot of the founders that we talk to, we even met up in person, over several meetings, and sometimes they don't work out, right? Sometimes they don't lead to deals, but we really prefer to get to know the founders before we pull the trigger. And I think the good thing we've learned from a first deal, which for batch one, which announced soon, is that because founders understand our value add, we are able to come in very late in the process and actually have have all the other funds commit already, and the founders are still willing to fit us into the round because they understand, wow, every dollar we take from Tangent is much more impactful on a per dollar basis than a really large fund. So that has been an advantage. Like, we are able to have a pretty drawn out DD process if we want to, but typically because we're so small, we also move pretty fast. But yeah,
Yeah.
curious if you have anything to add there, Daryl.
Yeah, I would say that I'm pretty satisfied with our due diligence process at the moment. I think it is quite a bit. I would guess that it's quite a bit better than majority of funds out there at the moment, in terms of thoroughness, and also to answer your question, Mabel, about what I want to see in founders. I think I really like it when we can identify founders that are uniquely positioned to solve a particular problem. Like what when we look at founders, we talk to them, we see their experience and their background, we see their motivation. So if everything comes down to answering the question, are you like really perfectly suited to solve this particular problem? Like, why you? Why this problem? And do you have the energy and that motivation that we don't really see anywhere else? And it's very rare to actually get a yes on that. So which is sort of why the of the 300-400 different applications, we're only really cutting it down to 3 or 5 different bets. But if we can get consensus behind a yes on that question, most of the time it's pretty smooth sailing, because I think that is the most important thing. But I also like the caveat that I think in terms of our investing process, the thing that we look at, the two concepts that we look at the most, and we have the highest weighting on our scoring metric, is really the team. So to allude to that, the first question, are you uniquely positioned to solve this problem? So if that's a yes, that ticks one box. And the second box is actually valuation investing, because for us as a fund, with the concentrated model that we have, we cannot afford to get too many things wrong. Right? We need that margin of safety, and that really is priority to us.
I think
Yeah.
all of us care about the valuation very much. I'm extremely strict about valuation. I
Yeah.
even have
Yeah.
I
a
noticed. Yeah.
I have a playbook in my mind. I think I think I know which one you're referring to, but I do have a number range in my mind, like what, like say pre-traction should be whatever, and then maybe if it's like an
Mhm.
extremely good founder, I can add maybe 5 million to that, something like that. I know it's not supposed to work like that, but I always use it as a reference check, and I think it's good. Um, I would
Mhm.
actually, for this question I asked, I think I only have one thing to ask from my own perspective, which is, um, I like to back the founders who are able to grind, but also know how to talk about a grind, because I realized that in
Mm.
like in crypto, um, I think I mentioned this in many places, but attention is the only scarce commodity. So that if someone is like willing to keep grinding, it's it's a very big factor in the success, but that's not enough in my opinion. Like, you also have to let other people know that you're also grinding. Otherwise it would be very hard. I think Solana was a great example. Back in the days, like, they've been trying to do a lot of other things, a lot of, the hard work in the early stage. But I think only after they started to know how to talk, like do the marketing and stuff, they really started to take off. So I mean, there are a lot of other kind of cases for this I don't have to mention, but I think that's really like one rule of thumb that I been summarized over the years.
That's really interesting because I don't think I've heard anyone bring that out yet. Kind of talking about the grind, and I think it makes sense, right? Because especially for you focusing on a lot of consumer products, consumers want to know that the products they're using will have new features, that their team is there to answer the questions if they if they need support. And this reminds me a lot of SPF in the early days. He's like personally answering help requests. Like, you could DM him on Twitter and be like, hey, I can't execute this order in FTX, and he will personally resolve it for you. So obviously now they're a much bigger company, they can't do that. But I think founders that do that in the early days versus founders that are just kind of laid back, or maybe founders that are way too product focused, right? Kind of engineers that build up a product and don't want to do any of the BD. I think founders like that tend to have a much higher hit rate. So I absolutely agree with that.
Yeah, for most of the consumer stuff, you have to stay on top of everyone's mind. um like think there's just too many things happening at the same time. Like you can't afford to lose people's attention.
Yeah, definitely, definitely. And as we're closing out right now, and feel free to jump in with additional questions if you have them as well, Mabel. But I really want to get your respective thoughts on the bear market, just because it's been a pretty brutal bear market so far. And it seems like everybody's just watching the macro and trying to see when it turns around. But then with the ETH merge coming up as well, seems like there's some optimism coming back to the space. So it's a very confusing time for investors and for founders who are trying to plan out their next round of fundraising. So, how do you guys think like the next 12, 24 months play out? What are some of the major things you're monitoring?
Shit, do you want to
Maybe
go
you want
first,
to go
Darryl?
first. I can
I,
I can
I
go first. So I mean, like us attention, even though we focus 19 and 95% of our day to day on primary markets, we still are actively looking at the secondary markets as well. And so with that, definitely paying attention to broader macro. In terms of the next 12 to 24 months, I would say that it's a pretty challenging period where I think what the price action over the last, call it 6 months, has caught almost every institutional fund off guard, and either on the way down or on the way up, right? I think a lot of funds were caught back holding too many positions as ETH went really from like 4K and crashed all the way to 1K. And on the consequent move up as well on this ETH merge narrative, a lot of funds were sidelined, just waiting for broader macro FUD to subside before putting on positions. So it's really a challenging time at the moment. I'm inclined to believe the most important thing to me, I think, is to be data dependent. And right now, it's pretty clear from a crypto specific standpoint, mindshare has not returned for the better part of retail and for the better part of the world. So we're still within this microcosm of people who have not left the space. And I think you need to look at when that mindshare starts returning. So that will drive crypto focus or crypto focused flows from the rest of the world into crypto, right? And the second thing is obviously watching inflation prints, watching GDP prints as well, to see whether the broader world is going into a recession or not, or whether we can navigate a soft landing for the Fed. Obviously, I'm not a macro expert, so the views that I have there will not really be relevant to the viewers probably. But I think right now, if you're looking to say if the question is when is the next bull market going to begin, it will be an amalgamation of both these two factors, right? When is mindshare returning, and how do we sort of play out in terms of macro in the next 12 to 24 months?
Yeah, I mean, I haven't really been spending a lot of time on investing, but here's a few, I guess here's some two cents of mine. Um, First of all, I think ETH merge, right? Everyone was focusing on this right now because I feel like this is probably the only kind of very hot topic these days. And people don't who've been like chasing the ETH growth probably haven't noticed that all of these NFT, it's like small NFT project that we call it JPEG or whatever, and some of the other ones that only like launched for not a long time, but then like has been on the secondary market. All of those has been very brutal. Um, like at least like I don't know, like 60-70% down. Like that's for the best. I think GMT was a good example. Like that it actually didn't go down that much, but still it was already like 70% or whatever, like down from the top. So what does that mean? It means like there were a lot of capital. Sorry, let me rephrase it. It means like whatever capital that was going into the ETH merge was actually just existing capital within the market. There's no new
Mm.
influx of the market. And then if you couple that with all of these, increase the rate hikes and then whatever, there's no way that there's new money coming in. So I think sure, like it looks like it's doing very well, but I think it's just like whatever does exist, and it's already like gone quite a bit compared to like the bull top. That's one observation. The other thing was that I would say a lot of the very large projects, including I don't want to name them, but like in the past few months, there were quite a few announcements saying like, oh, it was closed at 2 billion valuation or maybe like 5 billion valuation or whatever. Um, and those are not even mainnet launch, and then they're launching their mainnet soon. Um, at least one or two very smart hedge fund that I was like like tracking very closely. They were actually waiting to buy a lot of those on the liquid market, or like maybe they just like buy it on OTC, right? With a lot of those, and basically that process has not happened yet. Meaning like people who bought, or maybe it started to happen, but I don't think it played out completely. So I would say, we might want to watch out in the OTC desk and see like if there's like a huge rapid sell off, if the high valuation VC deal of the SAFT. And then if that happened, I think that might be a good consolidation point where we could start to kind of think about the next run again. And then I think the third part of this is just that, think about the valuation. The reason I really care about valuation was because I think it's a very good temperature check, and it's usually slower than the secondary market. Like primary market you can still see a lot of the pre-traction 30 million deal all the way around. But then like, secondary market isn't the case. But it usually I would say take at least quite a few months to reflect that. Particularly because in the last cycle, a lot of these mega fund, they raised a lot of money. There's no way that they are running out of money anytime soon. So like you probably see a delay of 6 months or even 1 year. I would say the real kind of bottom would likely to happen when we are seeing a lot of these deals. The pre-traction deal goes back to the level where we were used to. I'm just gonna pause here.
Yeah, no, I absolutely agree with that. That's one of the reasons that we're very deliberate and slow in deploying as well, right? We don't have to maintain the illusion of being quote unquote an active fund. I actually never understood why that's like a good thing when people say that, oh, we're the most active investor in crypto. It just means you've sprayed and prayed into the most things, so it doesn't really mean anything. So we're very deliberate. We look at a lot of stuff. We talk to a ton of teams. We invest very slowly because we like to diversify across vintage, right? Because who's to say in 24 months, seed stage valuations are not going to reset to like 1 million FDV. So I'm very careful about that. So I think we share the philosophy there. And I think in terms of the bear market, I agree with everything that you guys said. I think it's going to be a very challenging 2 years for founders that are trying to raise, especially if you are not coming from an extremely experienced background. It will be hard to raise. And for founders who have already launched a token and their treasury depends on the secondary price of the tokens, maybe try to find ways to extend that runway, right? Try to get 24 months runway. I know some projects that have gone way overboard to like 70, 80 months runway, but who's to say that's not the prudent thing to say? It's a prudent thing to do, right? So um, I am personally exercising a lot of caution. I think founders should as well. But regardless of what happens, I'm pretty sure we're still going to stick around here.
Yep, I agree. Do you want to maybe just talk about one prediction that you have for the next cycle, or maybe just like the next 24 month?
24 months is hard, but I will talk about next cycle. So the interesting thing is I did this, I think back in 2019, I was trying to predict DeFi TVL. And I think I was like, oh, it's going to get to $1 billion. And then I thought I was being way too exuberant. But then at the top, if you look back at the past few years, I think the top was like 180 billion. So I was way off. So if I have to make another prediction, I'm calling for $1 trillion in TVL, like within the next 5 years in all the applications combined. So we'll see how that pans out.
Interesting. I haven't really given many predictions. I don't think they. I mean, usually it's just a finger in the air kind of thing.
They
I
are.
think for I think for me, if I had one thing, I think the next bull market we will see a GameFi related project reach 100 billion in market cap or FDV.
Oh, wow.
I think that is within reason. And I think Axie was really the forerunner for what can be. And obviously this has to be at the height of the bull market, but I think it's possible.
Yeah,
I
fingers
actually
crossed.
wanted to echo you on that one, but I wouldn't call it GameFi because like these days people just keep using GameFi, SocialFi, everything with a fi because it confuses me. I don't even know what those are, but I would say just the next
Yeah,
the next 50 million users. I was gonna say 10 or 20 million, but now I'm gonna exaggerate a little bit. The next 50 million users are probably gonna come in with some sort of social entertainment applications. And then definitely gonna interact with blockchain with the quote unquote like Web3 account. It's basically going back to my thesis at the beginning. I said, and I think I'm very bullish on those. And I would believe that the next wave of entrepreneurs may not be extremely quote unquote crypto native, or well, not crypto native is wrong word. It's probably like people who care a lot about the political correctness about decentralization or a lot of those ethos like we used to care so much, because they would actually care more about the UI UX. And I think that's
Mm.
really where we will get the large amount of users. Cool. I think this is a good one.
Absolutely, absolutely. And this has been a really fun one. So before we go, let's do some shout outs. I think people should absolutely subscribe to your podcast, Mabel. What are some ways they can, follow you or follow your podcast?
Cool, thank you. Yeah, Spotify, Apple Podcast, and then for those who are listening, I think also Google Podcast as well. I didn't really upload it myself. I guess someone did. Yeah, so anything that you use to listen to Jason's, I think you can find me. It's hot long.
Yeah, we include it in the show
HOTL.
notes. Yeah,
Sounds good.
I love that name, by the way. And Darryl, for people who want to follow you, what are the best channels for them to do so or to reach out to you?
Yeah, primarily just Twitter. I'm just a Twitter guy, so my handle is 0xwangaren on Twitter. You can find me there. I have my little anime avatar with a little bird on my shoulder.
What is that bird actually? Is that a pet of yours that you
It's a
actually have?
callback to my very first logo, which I plucked off the internet. So
Oh,
That was
nice.
funny. I
Interesting.
didn't know.
yeah.
Cool.
But yeah, so I guess if you're listening to the show, you probably follow me already. So just check out the socials below and follow Mabel and Darryl as well. Thanks so much for coming on, and it's been really fun to co-host with you, Mabel, and really fun to have you both on the show.
Likewise, it's a pleasure.
Likewise, it's a pleasure.
All right, that's it for this week's episode of the Blockcrunch podcast. So thank you so much for tuning in. If you enjoyed this episode, please make sure to subscribe on your favorite apps. And in case you didn't know, this interview is also available as a video on YouTube. And if you tag the Blockcrunch on Twitter this week and tell us what you liked about this episode, I'll be sure to respond to you as well. Now, if you'd like to go even deeper, we have a VIP tier where every week or so, we write an in-depth research brief or investment memo on a project. And we'll have exclusive AMAs with myself where I answer all your questions as well. Now, we already have analysts from some of the top funds and companies in crypto as subscribers. So if you're serious about getting an edge in crypto, head on over to theblockcrunch.com/VIP to learn more. And once again, thanks for supporting the show, and I'll see you next week.